Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with Mr. Dan Bird. He's going to dive into some charts and show us how industry groups are performing relative to the S&P. Dan, take it away. Show your newsletter first so we don't forget this
Oh,
time.
yeah, good idea. I forgot to do that last time. Let
Yes.
me share my screen. So my newsletter is free. If anyone's interested in getting it, just send me an email to breakpointtrading@gmail.com. And I'll send you this week's newsletter and I'll add you to the list for the next ones.
Awesome.
And if you want to be removed, just let me know. I always put some little cartoons in every week just to keep things light and interesting.
They make me chuckle.
Yeah, I actually had a little happy Thanksgiving one in here too.
Nice. Look at you. In the spirit. Good job.
For everybody, because I won't have another one out until after Thanksgiving. I can't believe it's here already.
Yeah.
By the way, the economic calendar last week was pretty positive.
Yep.
I mean, still showed a pretty strong economy, right?
Yep.
Retail sales looked pretty good.
Yeah.
PPI went down.
Yeah, the Fed had a good week last week.
Fed had a good week, but they didn't have any reason to stop raising.
Correct. Yeah, sales were above expectations. Yeah.
Existing home sales even was higher than forecast.
But still down 6% roughly from last month. That's a hell of a drop for a month.
Yep, still down, but higher than it was.
Yeah. I think they're doing it on purpose. So, they're getting what they want.
Yeah, absolutely. In fact, talking about home prices, this is the Case-Shiller.
Good old Case-Shiller.
I showed this a while ago.
Case-Shiller's 2 months old. Every time it comes out, it's 2 months old.
Yeah, it's delayed.
Delayed's a nice word for it.
This is August 1st.
Out of date.
This is August 1st, but the whole purpose of this, and I put this together a while ago, back when the housing just started to really go parabolic way back here. Like in 2020 is when I first put this together.
Yeah.
Just out of curiosity, I wanted to see, when we had that big housing crisis back in 2007, I was curious to see what this would look like if it would give you an indication that the market was rolling over and maybe it was time to sell your house. Now, it's not that easy. You can't just sell a house, right?
Right. Not a stock. Yep.
Unless you could sell a house. And the time to sell is when the actual Case-Shiller line crosses over the 21-day moving average, which, as I've always said, is a reversion to the mean.
Okay. All right. I'm with you.
So it actually started to roll over in 2006, but it didn't cross the line until May of 2007. Okay. So if you sold your house in May of 2007, it wasn't at the absolute top, but it was pretty close to the top.
Yeah, right? I got lucky and got out in 06, but yeah.
Right. And then just stayed out, rented maybe, and just watched this line until it crossed back over the 21-day, which is May of 2012.
Wow, look at that.
And it has not crossed back since then.
Nope.
So it went up on a nice 45-degree angle until right after the pandemic. And we showed some charts about the pandemic on the last session.
Yeah.
This is just another one.
That whole parabolic is all rates. Rates were sub 3. Sub 3.
Crazy. Right. That's right. This pink one right here is actually the rate.
Oh, is that what that is? Okay.
This is the mortgage rate. This pink one is the mortgage, 30-year mortgage.
Oh, I like it. Okay.
All right. So you can see 30-year mortgage came way, way down.
Crashed. It's the Fed buying mortgages. They were 40% of the market, I think I heard. Wow.
Right. And right here, right when this just started to go parabolic, it was already 3/4 of the way into this big decline, this mortgage rate decline. So it's no wonder it went parabolic.
Of course.
The thing that I thought is interesting is the peak over here, the peak from the 21-day moving average to the high was 9.2%. And the peak here right now is 10%.
Huh. Okay.
So we're right at the point where we're due. I mean, we probably were due way back here. for it to roll over. But the mortgage rates really didn't start accelerating until just this year.
Yeah, June, July.
What are they at now? 7, 6?
It actually came down. They had a record fall last week. They were 7.08 2 weeks ago. Last week,
Right.
they closed at 6.61. So the largest drop since 1981.
6.61.
Yeah.
This one down here are wages. This is the consumer price index wages.
Yep.
You see that started to come down a little bit. If you remember the session that we did on my reluctant landlord.
Yeah.
I had to buy a house for my kids because they got kicked out by their landlord and they had nowhere to go, and I didn't want them to move back in with me.
It was easier to buy them a home.
So I had to buy them a house instead.
No, you're not living with me.
And this was in February of this year. All right.
Yeah.
So I don't know if you remember, and I had to buy it as an investor, not as a
owner.
As an owner occupant. I don't know if you remember the interest rate that I got at the time.
I'm going to say sub 4.
No, this is an investment property. Remember.
Oh, sorry. Sub 5.
Sub 5, yes.
Yeah.
4 3/4.
Wow. What today would be 8.5.
Right.
Yeah. Damn, that's good.
So that's only 6 months ago.
Yeah, the rate of change on mortgage rates is why we're having the housing transaction crash. It's just
yes.
Housing is in a depression. Building is down. I have these numbers from last week. I think home builder construction is down 40%. Transactions are down 24%, and it's not getting better. It's going to get worse.
Just in my neighborhood, the houses in my neighborhood were selling in one day.
Yeah.
With multiple offers.
Okay.
In fact, if you remember the story I told about trying to find one for my kids, there were 15 or 20 offers on each property that we went to. That was back in February. Mm-hmm. We've got houses up right now that have been, the longest one is 90 days.
Oh, wow.
But it still hasn't sold.
Yeah, but I mean, the thing I would talk about is some of these properties are still at wish pricing.
Yes.
And the seller wants to sell, but doesn't need to sell. So it's just an expired listing waiting to happen.
Yeah, probably. I mean, they're not all that way, but I think even the ones that have to sell, like one of my neighbors is moving back north. We call them halfbacks.
Halfbacks.
You've got snowbirds that come down in the winter.
Yeah.
And then you've got halfbacks that come down and then they move halfway back.
Oh, that's funny.
So he's having a house built further up north, so he has to move.
Yeah.
But he's hoping, and I think all the ones I've talked to in this neighborhood, they're hoping that they're still at the tail end of the housing boom.
They'll be the last one.
They're the last ones. Yeah.
Of course. Human nature.
Right.
All right.
So I thought that was interesting. Let's talk a little bit about some of the relative strength of some of the industry groups.
Okay.
So this is the home construction group. And I heard on your session this morning, you were talking about Lowe's and Home Depot.
Yeah. Yep.
Versus the general housing market itself. Mm-hmm. So I thought I'd put a couple of charts in here related to those. So this is home construction.
Okay.
It's still okay. You know, this pink line, by the way, this is a relative chart. So this is the home construction industry versus the S&P.
Got it. Okay. Got it.
So how are they doing versus the overall market?
Okay.
Right. Yeah. So if this is rising, which it is, then they have been outperforming the rest of the market.
Wow, that's that'll make you scratch your head.
But it's starting to roll over right here.
Yeah.
You can see how that pink line's starting to roll over.
Yeah.
The black line is the actual S&P.
Oh, okay. Got it.
All right. Now the next one is home improvement retailers.
Oh, look at that.
This is Lowe's and Home Depot.
So is that a subset of the previous one or different?
No, this is a subset of the S&P industry group.
So the first one would have builders, for example, and this
This
one
one
would
would
have
have
retailers.
builders. Yes,
Got
this
it.
one has
Yeah,
builders in it,
got it.
but they are different. They are different industry
Yeah, no,
groups,
I get it. I got it now.
but they're
Okay,
both in relative to the S&P. That's
understood.
that's the key for these relative charts, is it gives you a way to compare it to the overall market. So you're not just looking at something in a vacuum, you're making a comparison to how they look against the overall market. And that way you can compare two different ones against each other.
Yeah.
All right. So that's home builders. And that's home improvement.
Yeah.
Now look at the subtle difference in the slope of that pink line.
Well,
So
no,
there's
it's not
home
subtle.
builders,
Yeah,
home
it's
builders, home improvement.
doing much better. People are staying put. I mean, that's what I forget the research firm that did it. 4,000 homeowners. Only 1% of homeowners canceled a improvement project this year. So, yeah, home
Right.
improvement makes sense.
And this is likely to continue going
Yeah,
higher.
there's no rollover there.
Right.
Okay,
So, I mean, those
good
are
read.
probably good stocks. I mean, Lowe's had a good earnings report
They
last
did.
week as
The
well.
good earnings, raised guidance, better same store sales. Home Depot beat top, beat bottom, didn't raise. They held guidance, but yeah, both were not horrible. People were expecting bad things. Yeah.
Just out of curiosity, this is Lowe's. So Lowe's is above its 200-day, which is positive, trending higher. Looks pretty good.
Yeah.
All right. So there's home
Thank you for
improvement
that.
retailers. Now, if we go into technology, this is semiconductors. Remember, I said that in order for us to rally back to the highs, we need technology to participate.
Yeah.
And
Semis are a big part of that.
semi is a big part of technology.
Yeah.
So they have to not just participate, but they have to get back into a leadership position.
Okay.
They're starting to show some life, but this still has not gotten above its 200-day moving average right there.
Yeah, I'm not a big guy. Yeah. Semis are going to be very interesting the next 6 to 9 months.
Yes, they are. In fact, we have a semi report coming out next week.
Oh, we do. I didn't know that.
Yeah.
Okay.
Yeah. It doesn't show on here, but I saw it somewhere that there's a report on semiconductors, their order flow.
Oh, yeah. Makes
Right?
sense.
So that's semiconductors, and this next one is software. Now, semiconductors look okay. They're actually starting to climb.
Yeah, a little. It looks okay. Yeah.
Remember, this is relative to the S&P.
Mm-hmm.
So if this is climbing, that means it's outperforming the S&P.
Yep.
But when we look at software,
not so much.
Very different story.
Very different story.
Yeah, software is still underperforming the rest of the market.
Yeah, software is one of those companies, especially a lot of the cloud stocks that you and I know very well. In a rising rate environment, they are out of favor.
Yeah, not only a rising rate environment, but also a strong dollar.
True. Oh, yeah. When they have to repatriate the dollars. Yeah, you're right.
Yeah, that's both of those things. It's like a double whammy for them.
Yeah, I agree.
For these two groups, semiconductors and software, but for technology in general. I mean, their valuations are based on low borrowing rates.
Correct.
So as the borrowing rates go up, then their valuations go down.
It'll be very interesting because that's a space you and I played in together for 20 some odd years. And Atlassian, I think, sent the warning sign, whatever that was, 2 weeks ago. It's like, ooh, longer sales cycles, customers not buying, extra users. It's an ugly story that you and I have seen before.
And it's an ugly chart.
Oh, yeah, look at that gap down. Whoosh.
I'll keep pointing out this 200-day moving average.
Yeah.
I mean, that's really the key. You want to be in something that's above that line. And this not only is it below the 200-day, but the 200-day is trending down.
Yeah.
That is a long-term downtrend.
Yeah, it is.
You can look at one that you and I work for, Splunk.
Yeah.
Looks very similar, right?
Yeah.
Okta.
Yeah.
These are all enterprise software companies.
Ouch.
There's Okta. They don't look too good.
What's that? $3 stock or something? No.
50.
Oh, okay. I see it. Yeah.
Yeah, it's $50. Yeah. So all the software stocks are not looking too good right now.
All right.
But then we go to the one that is probably the best industry group in the whole market, which is renewable energy.
Oh, renewable. Oh, yeah.
Renewables.
That looks good.
Yeah. Now you can see this one's clear that it's outperforming the rest of the market.
Oh yeah, it's not even close. Yeah.
Right. Not even close. So, if you wanted to be in the market, and I don't necessarily recommend anyone being full in right now.
Yeah.
I don't think it's a bad idea to test the waters and buy a little bit.
Right.
But scale into positions and make them prove themselves before putting too much in.
What do you think about profit loss, or is it profit? Is it loss harvesting? What is that called? Tax loss harvesting.
Tax loss harvesting. I think it's a good strategy depending on what your portfolio has done.
Yeah.
So if you have a stock that you've made a lot of money on, and now it's underperforming, and you want to sell and take that loss against that stock.
Yeah. So what I hear you really saying is you don't let the calendar chart force your decision.
I do not let taxes.
Yeah, that's what I'm hearing you saying.
Affect my decision, my trading decisions.
I like it.
And I hear that from people, sometimes that, oh yeah, but why you want to pay taxes on that? You don't want to sell too quick. You want to hold it for 12 months.
Yeah.
So you can get long-term capital gains. And I'm like, yeah, what if it goes down 50% in 12 months?
Yeah.
Like a lot of these stocks have done. In fact, most of these started in, let me go back to Okta. Let's go back here and look at, let's go back and look at a 5-year chart. All right. So here's the beginning of the year.
Yep.
What if you had bought Okta, say in November?
Yeah, that would hurt.
And you were absolutely adamant that you're going to hold whatever you buy for at least 1 year, so that you don't have to pay. So you can pay long-term capital gains instead of short-term capital gains, right?
Yeah.
And you bought it in November, which was right near the peak of the whole market.
Yeah.
And that was at $270. And now it's trading for 50. Is that really a good decision to hold something just because you didn't want to pay extra taxes?
No, I agree with you. No, I like it. I've always thought that too.
Right. I mean, it doesn't really make sense to me.
All right. You got one more?
Let's see. This was telecom equipment. So this one's starting to show some signs of life right here.
Yeah. What happened there?
So
is this telecom? Is that Meta in that, or what is that?
This is telecom equipment. This is not internet
equipment. Got it.
There is another one and this is actually in the technology sector. There is one for internet, which is this one here. You can see how much different that one looks.
Oh yeah, underperforming.
Right.
Yeah.
So that's the one that Meta is in.
Got it.
Horrible.
Yeah. Yeah.
But if I go back to telecom equipment, and I want to make a point on this one. Telecom equipment right here actually is showing some signs of life. And one of the reasons I wanted to show this.
What's in that group? Sorry.
These are, I'll show you here in a second.
All right. Sorry. I don't know who's in that group.
Let me go back here. So this is the technology sector right here.
Yeah. Yeah.
So I'm in VectorVest now, by the way.
Okay. All right.
This allows me to do searches and scans on things. So I set up all these sectors, and I can look at the whole sector and see, which one bubbles up to the top. And you notice this one here, CLFD.
Yeah.
That's in the whole technology sector, number 3.
Oh, wow. Okay.
If I do which ones have just issued a new buy just on Friday, well, CLFD issued a new buy. Huh. So in all the technology group, this was the one that came up on top. And I'm actually going through the process that I went through when I was looking at these. So I'm like, wow.
Did you buy this on Friday?
Well, no, I didn't on Friday because it was after the close when I did this research.
All right.
But I looked at it and I said, wow, look at that. It had earnings, and earnings must have been great.
Right.
So there's the buy right there at the top.
Yep.
Right. Had great earnings. look at the earnings chart down here. That's what you want to see.
Yeah.
A nice trend higher, 45-degree angle, just consistently meeting, beating, and exceeding and raising guidance on earnings. Nice. Huge. Now the volume here you have to kind of take with a grain of salt because Friday was options expiration day. So it probably had more volume than normally it would. But even so, it had huge volume, had a huge up day, and it closed up near the high. Huh. Cool. So to me, what I would say is this is an interesting one that I'm going to keep on my list. I'm going to watch this.
Okay.
What I don't like when something like that happens, I mean, it went basically from $93 to $117.
Yeah, that's an.
So I mean, that's what almost 20. That's 20%.
Yeah, it's in a day. That's pretty.
In one day. So it could very likely start to trend back down. But I want to watch this to see if it goes back below the gap. You can see the big gap that it had.
Yep.
If it trends back down to the gap and then starts back higher, then that's when I might buy it.
Okay.
But more importantly, what other companies are in this group? And what group is this? So when I look at the graph, it shows me the group that it's in, telecom fiber optics. Okay. So it's a very specific group inside of that industry. And fiber optics is, I think, going to have a huge run with everybody, not only being on the internet, but looking at switching out of the cable providers into something else. And they're looking for fiber optic speeds. So now I know telecom fiber optics is the group that it's in. So I come over here to CLFD, right click on it, and it says view stocks in this industry group. Huh. So let's see what else is in there. There's CLFD right at the very top. And the very next one is INFN at $6.54. So what does that chart look like? Well, that looks pretty interesting. They've already had earnings.
Yeah.
They had a nice run after earnings. So earnings, it went down on earnings and the very next day bounced back. In fact, it probably went down before earnings. So they probably had earnings after the close.
Right.
And people didn't want to risk it.
And then they popped.
And then I haven't looked at the earnings yet, but the next day it gapped up and continued higher, but now it's pulling back. And there's the 21-day moving average, that blue one right there.
Yeah.
Look at the earnings trend down here.
Yeah.
Nice uptrend. So maybe what I want to do is watch this. There's the 200-day moving average right there. It got above it. It's right at it. I want to watch this and see if it will pull back, maybe in this range between the 200 and the 21.
Interesting. Okay.
And maybe I'll do a trial buy on this one.
Nice.
Because it's in the same group as that other one.
Okay.
So that's just kind of the process that I will often go through.
Very cool.
When I see one that's really taken off, like CLFD, I want to see what else is in there, and is there something that looks interesting?
Okay.
All right.
Makes sense to me. Yep.
So I think that's pretty much all I've got. These are the sectors, and utilities on Friday had the best day for the whole week. Staples. So they're still defensive sectors, interestingly, for last week. Defensive sectors did better.
Very, very cool. Well, Dan, do me a favor, show your newsletter one more time. And again, we will not be at this next week. We will be
that's
back
right.
in 2 weeks.
Everybody sell everything tomorrow.
No,
Wait till we come back.
That's a joke. That's a joke.
Yeah, I'm not giving advice.
No, it's sense of
just
humor.
Having fun.
There you go. Breakpointtrading@gmail.com.
Right. Just send me an email and I'll add you to the list. I'll send you this week's newsletter. Next week, Thanksgiving, the market's closed, and the day after on Friday, the market closes at 1:00. So it's a half a day. And then that's Black Friday too. So depending on how Black Friday goes, might determine how some of the retailers do the week after that. But you can see what the trend is over 21 years, trend starting next week into the end of November. Looks pretty good.
Very cool. Well, Dan, thank you for doing this every week. It's amazing that you give us this gift. I appreciate you. Happy Thanksgiving. We'll talk in a couple weeks.
Same to you. Happy Thanksgiving.
Thanks,
You and
bud.
all your listeners.
Yeah.